building community is really hard, and we have not gotten it, right all the time. We've had many, stumbles and iterations for sure, but we have done, a few things right. And I think that kind of comes down to like, one, keeping it really pure. So everyone who is engaging is a builder, right? And so that's kind of the thing that brings them together. I'd say the second thing is, really organizing people by things that motivate them and excite them. And so sometimes that is actually geography. They really love meeting up in Austin because they're so excited about the Austin ecosystem. And sometimes that's a vertical, right? Like all of our logistics founders are they're very excited about logistics, and they want to share resources and share learnings with each other. And so sometimes it's around an affinity group. So figuring out how to slice and dice your community so it's high value, I think is kind of the second thing. And, we've been really lucky. Like our Slack channel, I think we've just exchanged over 1 million messages. And there's no cat memes. Like it's all founders exchanging resources, right? It's not chit chat. There's zero politics on our Slack channel. It's really all about things that impact founders. So I think, starting slow, building over years, and realizing that it takes time to build something substantial. And I think, people just think like, oh, I'm going to throw up a community and everything's going to be great in 6 months or a year or 2 years. We've been building this community for 6 years. We're very protective of it. We're very proud of it, but it also is a slow and steady process.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast, and today we have Jenny Fielding with us. Jenny is a co-founder and managing partner at Everywhere Ventures, a pre-seed focused venture firm investing around the world. Prior to co-founding Everywhere, Jenny was the managing director at Techstars for 7.5 years, where she led investments into companies that now have a market cap of over $10 billion. In this episode, we talk about Jenny's story and how she started investing, why Everywhere Ventures has a global investment focus, how community is the lifeblood of Everywhere Ventures, tips on how to build and nurture a founder community, importance of personal branding for VCs, how they source high quality startups from around the world at the earliest stages, and lots more. So without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10X, where I help VCs start and run their own podcast. While I was running VC 10X, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co-investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you, from pre-recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well-researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you. Hey, Jenny, so good to have you on the VC 10X podcast. How are you doing?
I'm great. Thanks so much for having me.
Yeah, pleasure having you on. To start things off, can we first have your story and how you started Everywhere Ventures?
Yes, well, my story has been a long, winding road, as many venture capitalists, I think, have. So I actually started much more traditional career. So I went to law school. I worked as a lawyer and then as a banker. So very traditional New York path, right? And while I was working in finance, I had an idea, not for a startup, but for a product in the market that could solve a problem that I was having. So typical empath founder, right? Wanted to solve a problem for myself. And started jamming on it nights and weekends, as many founders do. And ended up bootstrapping our company to a launch. And at some point, I remember my friend saying, I think you better quit your job at your big bank because you're running a startup. And so I never really thought of myself in those early days as a startup founder. I really just thought of myself as a person that wanted to see a product in the market that could solve a personal problem. And, that kind of launched me into tech and have been in ever since. So had two startups. One rather successful, one not. So I've had all of the experiences, the goods and the bads. And that kind of really led me to where I am today, which is I think if you've got, the experiences of a founder, it makes you really open to the possibilities of what it's like to be on the other side, right? Because you start thinking like, oh, what does it actually take to be funded? What does it take to build a company? And so that's kind of led me to my path now. So I spent a few years at a corporate venture capital fund, a bunch of years at Techstars, and most recently running my own fund.
Totally, that's an amazing journey. And I know Everywhere Ventures that you're working on right now, it was called something else before, and now it's rebranded to Everywhere Ventures. So tell us about that story.
Yeah, so as I told you, in terms of my company that I bootstrapped while I had another job, I bootstrapped Everywhere Ventures while I had another job. So I was working full time as a managing director at a fund. And kind of had this idea of a by founders for founders community. Think of it as kind of part angel group, part fund, kind of drawing on the best of each kind of group. So using community, but also using structures, fund structures, as opposed to angel group structures. So came up with this idea and was able to launch it while I still had my full-time job. So again, kind of bootstrapped our fund, actually ran 2 iterations of our fund. And so, it was really like a proof of concept. We wanted to kind of keep it quiet within our community, but it ended up kind of have a life of its own. And was an opportunity too good to pass up. So in 2022, my co-founder and I decided to leave our jobs and go full time with a rebrand that I think represented who we are and kind of what we stand for.
Absolutely, that's quite interesting. So, a couple of things I want to dig into. So, what was the job that you were holding while you were starting what is called Everywhere now? So, was it the job at a VC firm or was it something else?
Yeah, so I spent 7.5 years at Techstars as a managing director running the New York office. And while I was there, I got to review thousands of applications and, really kind of understand that 0 to 1, not just from a founder perspective, but from a VC's perspective. So I'd say I kind of honed my thesis while I was an MD there. While I was there, I invested in about 80 companies and was lucky to be the first check into a company that ended up going public and a couple of unicorns. So it was a really, incredible experience to kind of see, 2 people and an idea really, blossom into some, impactful companies.
Absolutely, quite interesting. And you mentioned how you were trying to iterate on what would be the right thesis for the fund that you want to start. So tell us about that iterating process, since you also had that first row seat of a major investor in the startup community, which is Techstars, right? So how did that experience help you navigate those iterations, and what were those iterations, and what was the final iteration that you stuck with?
Yeah, so my real learnings were, as we came up with this thesis, how do you do venture at scale? And so the big takeaway was that you can't do it on your own, right? You can't have 2 general partners supporting a portfolio of hundreds of companies. And so what I learned is that you can utilize a community to kind of help, and you can utilize that community at all stages of the funnel. So top of the funnel, right? So you can have other people that are helping you kind of scout companies. When you think about diligence, you can have this community of experts also help you on diligence. And then ultimately supporting a large community, you can do that with, to support a large portfolio, you can do that with this community. So we kind of came up with our thesis based on our years of experience, both starting companies and investing in companies. And that was kind of the everywhere thesis. So when we think about our deal flow, just to kind of dig in, we don't go out and try to find companies, right? So that's something that's different. We have 500 founder and operator LPs that are our ears and eyes on the ground located around the world. So whether they're in Lagos, Nigeria, or Sao Paulo, Brazil, or Austin, Texas, we have LP founders. They're people that are running their companies, that are operating companies, and they're out there looking at interesting deals, because sometimes they're angel investors and sometimes they just have, interesting founders that are working for them, that are expanding out, or people in their ecosystems. So that's kind of like how our top of the funnel works. Then for like our second layer, if you think about the diligence, well, how does Jenny diligence a company in Brazil? I've got a number of founder LPs and a number of portfolio companies, so I can very quickly kind of triage, like, who are these founders that we're looking at? What's their reputation in the community? Have they been good participants? Like, who knows them? So we can quickly get information on them from a geographic perspective, because we've got this large community in Brazil. And then we can look at the vertical. So if they're a healthcare company, we have healthcare founders around the world that are part of our community, and they can quickly help us triangulate, what are the questions to ask? Are these, up and coming areas? And, how can we get smart about this area quickly? So that's kind of like, middle of the funnel. And then obviously, like, once we invest in a company, how do we support them? So instead of what most VCs do, which is kind of a one-to-many, right? There's one GP and there's many portfolio companies. We try to create a paradigm that's many to many. So we have a community of founders and operators, and they're incentivized as LPs and great community participants to support that larger portfolio. And whether that's in their geography, attending our events, whether it's virtually interacting, on our Slack channel or through our suite of collaborative tools that we've built out. It's really kind of a larger community where we make less of a distinction between GP founder and portfolio founder.
Absolutely, that's quite interesting. So community seems to be the lifeblood of Everywhere Ventures, right? Very interesting. And so community is actually very hard, and it's something that a lot of VCs don't indulge in, thinking it's a lot of work and it's hard to build communities, it's hard to engage communities, and it's hard to grow them. And most communities that spring up actually die out or are just dormant, they are not active, right? So what would be your advice on that front, having done that? What were the practices that you employed to start out that community initially, and then to engage them, and then to build that kind of trust that they have that trust to invest with you? So tell us about that.
Yeah, I think the genesis really comes from my first startup, where I didn't feel like I had any community. I felt like, I was, building a company in New York. It wasn't a very friendly place at the time to build a startup. Most of my community were, consultants or in banking, law. They just didn't come from startup DNA. And so it was very hard and lonely. And, quite frankly, I was kind of lucky to to get through it the way that I did, but I really, felt like I was lacking, a lot of support. And so as I became an investor, and through my experience at Techstars, which is much more than a venture capital fund, it's really a community, a resource for founders, right? Through their mentorship-driven methodology, they're able to support founders, with resources to help them grow. And so through that, I kind of realized, like a light bulb went out on, like, actually cash is a bit of a commodity. And just trying to support one founder, helping them recruit, or doing all these things that like platform people do is like really hard and expensive. So how can we kind of do this at scale in a capital efficient way? So that was kind of the genesis. Now, to your point, building community is really hard, and we have not gotten it, right all the time. We've had many, stumbles and iterations for sure, but we have done, a few things right. And I think that kind of comes down to, like, one, keeping it really pure. So everyone who is engaging is a builder, right? And so that's kind of the thing that brings them together. I'd say the second thing is, really organizing people by things that motivate them and excite them. And so sometimes that is actually geography. They really love meeting up in Austin because they're so excited about the Austin ecosystem. And sometimes that's a vertical, right? Like all of our logistics founders are they're very excited about logistics and they want to share resources and share learnings with each other. And so sometimes it's around an affinity group. So figuring out how to slice and dice your community so it's high value, I think is kind of the second thing. And we've been really lucky. Like our Slack channel, I think we've just exchanged over 1 million messages. And there's no cat memes. Like it's all founders exchanging resources, right? It's not chit chat. There's zero politics on our Slack channel. It's really all about things that impact founders. So I think, starting slow, building over years and realizing that it takes time to build something substantial. And I think, people just think like, oh, I'm going to throw up a community and everything's going to be great in 6 months or a year or 2 years. We've been building this community for 6 years. We're very protective of it. We're very proud of it, but it also is a slow and steady process.
Absolutely. And do you have any community engagement practices, maybe having different community leaders for different subgroups, anything like that, or maybe activities you do on a regular basis to engage or bring activity to the community?
Yeah, I'd say that our in-person events are one of our best ways to engage. So my co-founder was in Berlin last week and he hosted an event there. I'll be hosting an event next week in Europe. So, we try to live up to the name Everywhere Ventures and we try to be everywhere. And then we've got, about 30 venture partners who are located around the world and they're the kind of stewards of the community in their locations. And so they help us both with events and with supporting that community. So I think having these distributed nodes has been, quite helpful. And again, it creates this really nice kind of flywheel of both deal flow, support of companies, and engagement.
Absolutely. And also let's talk about the everywhere thesis, literally everywhere thesis, right? So how did you come to that thesis that, okay, we're going to invest everywhere, literally, right? And I saw your portfolio. There are startups scattered all across. I did see that I think majority are still in the US, but there are some all over the world, right? So how did you come to that everywhere focus and also looking at it from the LP perspective, because LPs sometimes want to put VC funds into different buckets that, okay, they have this focus, this sector focus, this geography focus, right? So does that make any hindrance on that part going for the LP fundraising that, okay, we are very broadly focused, we invest everywhere, right? So tell me
Yeah,
about
I
that.
mean, I think ultimately, like our core is that we believe innovation is everywhere, and capital historically has been constrained to a few geographic locations, and that's really changing and opening up. And I've actually lived it in 2007 when I started my company in New York. It was grim. I mean, there was no founder community. There was no venture capital. People, said, if you're going to build a software company, you need to move out to the West Coast. And I kind of looked around and said, well, actually, New York has some really great things. It has capital, it just doesn't have venture capital. It has incredible universities and talent flooding out of big corporates. You can sell into every multinational. So I kind of looked around and thought, well, that's silly. It took a long time to catch up, and now we see New York as the second largest tech ecosystem. So we take that thesis and say, okay, so now it's not New York, where's the next place, right? And, we started again with our kind of distributed system of having nodes of founders and operators in these locations. We started in London and LA and Austin and all of these places to kind of build momentum. And now we're seeing, that there's founders, there's capital, and there's really exciting momentum kind of across the globe. So we, again, didn't start from day one saying we invested everywhere. We started from day one saying, this is our thesis. How do we get there? And over the last 6 years, we've gradually opened up new markets when we felt like we've had the expertise on the ground that could really help us. So I'd say, again, sometimes people look at us and like, that's crazy. I'm like, well, it's 6 years building. It's very ambitious, I will give you that, but I'm not sure that, that it's so crazy. So yes, so we look at companies globally, primarily across three verticals, which are areas that we have a lot of experience in, and we have a lot of excitement as like the next big categories. We call it the table stakes economy. So what do you actually need to live? Money, health, and work. So we do a lot of fintech and everything around kind of the payment stack. We take a very liberal use of fintech, whether it's e-commerce enablement or anything that's really involving a transaction. The next is health. We think that this is one of the most critical areas that we want to be supporting. Obviously, the U.S. has a very complicated healthcare system that is not serving many people. And so we invest in all different types of digital health, up and down the stack, whether it's, EMR systems or billing systems. There's a lot of friction there, and we're really excited about some of the opportunities around AI and automation there. And then the last vertical is pretty broad, future of work. So oftentimes we see that as vertical SaaS, but sometimes you see it as developer tools or kind of new modalities of working. So again, can be broad, but that's the other category that we have been investing in for the last 5-6 years.
Absolutely, totally agree. And talking about the LP community that you built, so are all your LPs founders and operators, or do you have any typical LPs like family offices or maybe institutional investors? So give us an insight into that.
Yeah, I think I didn't answer your question of how do LPs feel about our broad thesis. I think what's interesting about it is that many of my emerging manager friends, when they go out to raise their funds, they have to speak to thousands, hundreds of LPs, and they have many, many meetings, and they don't really know where they stand. It's really different for us because I think our thesis is quite binary. People either totally get it and love it, and they understand why a distributed network, lots of shots on goal, high volume can outperform, or they don't get it. It's just not what they think, where the opportunity is, and they're much more tied to a more traditional, say, seed fund, where you invest in 30 companies, you do it just in one area, you're very thesis driven, and you're very ownership driven, which is a thing that we're not. So I would say, on the one hand, it's not great to have a smaller LP pool, but when we pitch this to LPs who get it, their eyes light up and there's kind of a sparkle, and like we know that we can close them. So that's like a little a little thing that I share with some other emerging managers is that you kind of have to you have to live by your thesis. So there's good and bad about how our fund structure works. So we started off having only founders and operators as LPs. So our prototype or our proof of concept funds 1 and 2 were all founders. As we moved into our third fund, a little bit bigger, so our last fund was 25 million, we kind of sat back and thought, okay, well, we can't, it's gonna be hard to have all these 50K checks because we have a limit of how many we can take. How can we both, keep the integrity of our community, which is really founder focused, and then open this up for other folks to come in. And so we layered on both some family offices, some fund of funds, and a couple of later stage venture funds as our LPs. And so that was really kind of the difference. But we still have 500 founder and operator LPs, which is really kind of the core basis of our fund.
Surely. That's a great approach there, Jenny. And like you said, shots on goal is something that is important, especially at the stage you're operating at with a focus on pre-seed, right? So tell us, how important does that become shots on goal, and what's your portfolio construction on that? How many companies are you targeting from a specific fund, and how does that play out over time?
So we believe that if you have more shots on goal, you don't have to be as ownership driven. And I will caveat that by saying we do all pre-seed and what we call pure pre-seed, which is really small rounds under 2 million, valuations under 10. So, we're not doing crazy things like writing a 50K check into a $100 million valuation round. We're being quite disciplined with a core 250K check into, say, a $1.5 million round that's priced, at or under 10. So that's kind of our structure. And we'll have about 90 investments in our current fund. And so, you can kind of do the math in terms of what ownership looks like. But it gives us a lot of leeway to take a lot of bets, have a lot of companies actually not work out, and then, double down on some of our winners.
Got it. And do you also have a reserve strategy to like invest in follow-ons in the winners?
We do.
Okay. Can you share like the percentage? What percentage is reserved for follow-ons?
I can't actually.
No worries. No worries.
Sorry.
That's awesome. And now let's talk about something kind of different from investing, but still crucial to investing, which is personal branding. I see you very active on social media platforms and constantly sharing your learnings, how you're going about building this fund, right? How important do you consider that as a part of your job as an investor? And how does that reap you results as a VC fund? Does that get you better deal flow, get you in front of better people, and they recognize you as that? Okay, I saw a post from you, right? So tell us about that. How do you approach personal branding? How important is it according to you? And what are the results it is reaping for you?
Yeah, I think, my thinking on this has evolved. I think when I started as a founder, like many founders, I was a product oriented founder, and I thought you build a great product and customers will come. And you kind of realize when you're building a startup that that's not exactly true, that you have to figure out, who your market is and how you're going to reach them and how you're going to win their hearts and minds, not just through product features, but, other ways. So, taking some of those learnings as a founder into my investing, ultimately, with a small fund, the people behind it really are the brand and the strategy. So there isn't a differentiation. If you're at a big fund, if you're at Bain Capital, right? So it's like you have Bain Capital and then you have the great GPs that are there. And there's like a little bit of separation. With us, the brand for Everywhere Ventures is really myself and my co-founder, Scott. And who we are in the world. And we're both, have a lot of opinions. We've both been doing this for a decade. We both have been founders. And so we feel like we have a lot of just candid, insights that we want to share. I think when you make that decision that, your brand is yourself in many ways, you have to be ready for, the backlash in some ways, right? So when people don't like something that I'm saying, it's also reflective on our fund. And it kind of always makes me laugh when people on social media, on Twitter, are like, my views aren't representative of the company. It's like they are in many ways, right? And so when you run a small fund, they definitely are. And so, you have to kind of be ready for both. But I'd say, what's been great for me, on social media is really just having access to more founders. There's 10 hours in a day. I can only do so many 30-minute calls with founders, and that doesn't exactly scale. So we've tried to address that in our fund structure, our large LP base, how we can get, our nodes activated through deal flow. But another really great way to have one-to-many is through social media. So if I share an insight, that can kind of ripple through a larger community. So that's been really helpful. And as you said, I like to share insights and things that I feel are true. They're not necessarily universal truths, but they're things that I've experienced personally, which I think is helpful. And I think, the thing that resonates with people the most is that it's just really genuine, right? So it's just not the same bullshit that, you're reading in the tech rags, which kind of distort, I think, our industry. And I think it's just really important to have different voices talking about different perspectives. And I think that's something that I can bring. And then people can make their own decisions, what they think is true or how they want to pursue their startup or how they want to be in the world. But I hope to be that genuine voice.
Absolutely. And So you briefly mentioned about sourcing, and one practice you are using in that is by leveraging scouts. So are these the same founders and operators that you're referring to as scouts? Are these the same people, right? Yeah, awesome. So is that scouting very much organic for them, that deals automatically come to them, they just know people who are starting up and they are just telling you about them? Or is it sometimes also an outbound effort that they are trying to keep a tab on the local ecosystem and trying to see who are the people starting up and doing
Not
that?
outbound at all. They're just founders,
Hmm.
building their
Right.
companies. And oftentimes, their product manager is spinning out to start something and they might put a little
Hmm.
check in. And so it's organically. We believe the fundamental glue is that great founders attract other great founders. And some of our best investments in our fund have been referred by very successful founders who other
Right.
founders are attracted to. So we think that's the flywheel. So our scouts are just our LPs, but they feel very incentivized because they're tied to the community, right? We talked about how community was paramount. They are tied to
Yeah.
our fund because they're LPs, as opposed to a lot of funds that just have scouts that are just out there that they give money. Who are that's one way to do it, but our LPs are actually tied to our economic success. And their DNA is founders. So we believe that founders have a unique edge in spotting other outlier founders. So that's kind of the structure.
Absolutely. I completely agree with that. I think one important aspect when scouting deals is that quality attracts quality, and you can't just have any random people as scouts and expect them to find you the highest quality of deals. That is very hard to actually happen because they don't have that organic connection with those people, right? But if someone is a high quality founder already, people know them in their local ecosystem, then it is very obvious that new founders are going to approach them and come to them to get the learnings, and also they will know that when they're fundraising. So it's going to be
Yeah,
it's
I
that's
think
a great approach,
that's
right?
absolutely right. And we got a few thousand deals a month at this point
Hmm.
between our founder LPs sending stuff in and people that find us oftentimes through social media. So it's really funny. I'd say probably like 60 to 70% of founders, when I talk to them, even if they're referred in by one of our founder LPs, says, "Oh yeah, I follow you on social." So I think that they're kind of reinforcing, right? Is that people, one of the comments we get all the time is that people are surprised our fund is quite small. I mean, we've been around for a while, but our AUM is pretty modest because we have our newsletter that goes out to 25,000 people, and our social, and we've got these nodes of people around the world and 300 portfolio companies. So I think that kind of helps us get the brand out as just, I mean, we're just a teeny little micro fund, very, very scrappy.
Yeah, that might not actually be a bug but a feature there, because your fund size also determines your strategy, and I think the strategy you're practicing at everywhere gels perfectly with your fund size. So that's great. uh, Awesome. So is there anything that you are trying to do differently at everywhere ventures, other than obviously a strong focus on community?
Yeah, I mean, I'd say, when we got started, we looked at like, okay, what's an angel group good at? It's good at bringing people together. It's good at sourcing from many different places. What's an angel group not good at? It's not good at making fast decisions. It sometimes can be consensus driven, which we don't believe in. There's really no, governance or structure. And then we looked at a venture fund and we're like, okay, well, that has a lot of governance and structure. They can move fast. They have a process, but they really can't scale. So I think the thing that we were trying to do different is just like pick apart where we see traditional venture going. Also, the geography thing. I mean, many people think it's pretty wild that I could be investing in Africa and LATAM and the US. But we've been honing this strategy over 5-6 years. So, which layers on to like our earlier investing, which we've been doing for a long time. So I think it's just about making these small tweaks, iterating, and then all of a sudden, like it comes out, and it seems like it's pretty dramatic. Like, oh, we invest everywhere, but these have been small steps that we've been building over time.
Absolutely. And you mentioned about how you're getting 1,000 deals a month, I think, right?
I think several thousand at this point between our
Okay.
referrals, our website. Yeah, we get quite a
Yeah,
bit.
yeah. So that's very heavy deal flow, right? And that's a good problem to have. But I would like to understand how you manage your time as a VC with such a heavy deal flow. So, and you're also active on social media, you're doing all sorts of things. So, how do you manage your time? Can you give us an insight into a typical week or a typical day in your life?
Yeah, I mean, the first thing I just like to say is that it's actually hard, and it's not, people shouldn't feel, bad for me or anything like that. But when founders don't understand why they can't get on your calendar, I literally am like, let's break down the math, right? And the math is that there's 10 hours a day, and sourcing deals and talking to new founders is only one part of my job. So what are the other parts of the job? As you said, it's branding and marketing and getting out there. And why it took so long to get, on your calendar was really just like the schedule, right? So it's being out there, being at events, travel. Um, Obviously it's helping our portfolio, right? And so I'd say like our superpower as a fund is really helping our companies get to the next level, which often is the seed. So, personally, I love helping pre-seed founders raise their seed, helping them craft their narrative, helping them build their investor pipeline, making those introductions. So that's something I spend a lot of time during the day doing, and making sure that our companies are, evolving to the next level. And then there's the less sexy stuff, like someone has to pay the bills, right, and do payroll and make sure that we have the right health insurance and all of that. So and then of course there's managing a team. We have an ops person, someone helps us on community. We have a full-time associate. So then there's kind of managing fund, and then they're sourcing new deals and making sure that we go through our proper diligence and all of that. So it's a lot of things. Honestly, I love it. I wouldn't really want to be working at a large fund because when you're an emerging manager of a micro fund, you're much more like a CEO of a startup, right? And that's my happy place, right? Is wearing lots of hats, being able to triage many things. I'm an incredible multitasker, and the day is never the same, and it's super interesting. So, during the day, I might be fundraising for our fund. At the same time, I'm helping 10 founders fundraise. At the same time, I'm dealing with, a founder that needs to shut down. At the same time that I'm doing a podcast. At the same time that I'm paying our payroll. So having all of those things in one day, I think is just magic. And I actually love it. And I know some fund managers, all they want to do is invest in companies. And that's great. And I think if you work at a bigger fund and you just are focused on, investing, that's really cool. But I love the challenge of all the different hats.
Absolutely, that's insane work ethic on your part, must say. And so now moving to the last main question before we do the rapid fire round, and this is, what do you think is the biggest determinant of success in early stage startups that can be checked at the pre-seed level where you're focused at?
That's a good question. Well, we look at three things when we meet a founder. The first is that the founder has a secret about the market that may not even exist now, right? So this might be a future market, but this founder is well positioned. It might be that they had an experience in the space. It might be that they worked in the space. It might be that they've just done a lot of work kind of understanding the market, but they've got kind of a unique secret that other people don't see. And so that's something we look for very acutely at pre-seed. I'd say the other thing we look for is this idea of a fast founder who's very responsive to data. So sometimes we meet founders and, they are very thoughtful, which I think is great, but sometimes slow to act, right? Someone will give some feedback and they're thinking about it and they're talking to their team about it, and like nothing really happens. And I'm not saying that that's not a great founder, but it's just not the founder that we work well with. We work well with founders that are very open to data, to pivoting, to being responsive, and that are constantly thinking about kind of iterating and are doing that, right? So that's what we call the fast founder. And then I think the last is the resilient founder. This is both a marathon and a sprint, and that's really hard to put those two things together, especially when you're in a tech downturn like today, where you're like, wow, I mean, I don't even know where the market's going. There's a lot of uncertainty. And so we're looking for founders who really understand this is going to be a long game, that they're not in it to make a quick buck, and that there's going to be ups and downs, and they're willing to go through it as opposed to kind of throw up their hands. So I think the resilience is something that we really look for and try to check at the early stage. And sometimes that can be around, what's the founder DNA? What are the things that they've had to overcome in their life? And so we love those stories when we meet founders about not just, how easy their life was, but how they've been able to overcome challenges.
Absolutely. Great approach there as well. Now let's do the rapid fire round. I'll ask you 6 quick questions about the investing you're doing, and you have to give 6 quick answers, right? Great.
Sounds good.
Uh, awesome. So the first one goes, what are the sectors and regions you invest in?
So we invest globally, and we invest across 3 core areas: money, health, and work.
Great. What's the typical stage of investment?
All pure pre-seed.
Great. Do you lead rounds?
We're happy to lead rounds. Our typical check is $250K.
Got it. Where can founders apply for funding in case there is a direct way?
Everywhere.vc.
Got it. Last one. Where can our listeners follow you?
Follow me on Twitter at JEFielding.
Awesome. I'll make sure to put all those links in the show notes below. Thanks so much for making time for this, Jenny. I know it's very hard for you to make time, but thank you so much. And I wish you happy investing.
This was so fun. Thanks again for having me, Prashant.
My pleasure.